Well, good morning. It looks like silver and gold took a pretty good beat down yesterday, but it's struggling to get back up now. Gold was up to like 13.95 overnight, and so it's trying to come back up to where it was. Silver's up like 27 cents right now. It's like 27 or 28.63. So I think probably obviously it was profit taking, and that's always going to happen when you get these big spikes in price. Someone's always going to go out and take their profit. But then what happens is the people who buy and hold the metal come back in at that lower price and buy back. They buy back in, which solidifies the position at that price. So this is going to keep going on. It's going to spike. They're going to sell off. And it's going to keep building underneath a steadier position. I think I usually talk about China being the demand, not just me, but a lot of people talk about China being the big demand. But there's an article this morning, actually out of India, that says the U.S. is, the Indians are exporting gold, silver, and diamonds to the U.S., and those exports are up as much as 20%. So it looks like here in the U.S., as far as at least jewelry, the demand for gold and silver is on the rise. And as we all know, I mean, jewelry is just another form of bullion, and it's gold, it's silver, so it's worth the same. There's another interesting note in this article. This article is on Israeli Diamond website .co.il. So, but there's a note here at the bottom that said that sterling silver is actually going to replace low purity gold as the metal of choice in the entry level point of of jewelry with diamonds being placed in it. So instead of like a chintzy 10 karat gold ring with a nice diamond in it, they're going to start using sterling silver, probably to try to bring that price down and encourage more people to buy. But still, that's an added use for silver, and now it's obviously going to add to the demand. And there's another thing going on here with some new ETFs that are going to be coming out, and I kind of have my money spread around in different metals. I don't just own silver and gold. I have mine. I have some copper, aluminum, zinc, lead. I have those things in my own investment. So, but there's a couple ETFs here. A copper, a tin, and a nickel ETF they're going to be launching pretty soon. And as we saw last week, they accused it of it being JP Morgan. Then afterwards, they weren't so sure if it wasn't just a client of JP Morgan's trying to front run. But JP Morgan was rumored to, or applied for, a license to launch a copper ETF. And someone bought a huge, half the copper on the LME, and they think now it was just somebody front running JP Morgan. But all that beside, there's three new ETFs: a copper, tin, and a nickel ETF. And in order to secure these ETFs, they're going to have to buy a huge, amount to put in a vault and to put into storage. So that's going to take metal off the market, and you're going to see an increase in the price. So if you were thinking of front running some of these guys, it might be a good time to do it now. There's other ETFs that you can hold some of these metals. I'm not sure about nickel, but I know copper you can get like power share. The DBB is the symbol, but it's the power shares base metals fund, and it's an ETF. And I know a lot of guys don't like ETFs, but you know what? If you make money on it and you sell it, are you going to get back the money? Look, you have to make some money for yourself, and these ETFs, for all the bad that's said about them, do take metal off the market and increase the price. The palladium ETF, they already added like 108,000 ounces of palladium to their storage vault since November 1st. So I mean, the palladium market is very small as it is, and that just puts a squeeze, it puts a tightening in that market. So if you can front run these, more power to you. It's something to look at. You can go on Kitco and see the base metal prices. So that's pretty much it for right now. Let me know what you think. Just leave a comment below.